listening to the Subrogation Support Network, a podcast from Mathieson, Wickert & Layer, America's subrogation law firm, with dissemination of new developments and changes in subrogation law, as well as emerging trends and best practices. Here's your host, Ashton Kirsch.
Hello, everybody. This is Ashton Kirsch, your host of the Subrogation Support Network podcast. Thank you for joining today. Today is going to be a really nice episode, fascinating stuff, and we might even get some good dad jokes in there today because we have my good friend, one of the best co-presenters I've ever spoken with, actually, Simon Keshishian. It's like the noise you, what'd you say about it? It's like the noise you make when you sneeze. Is that how you told me to say it?
If you sneeze, it sounds good. Hey, Ashton, nice to see you, or for anybody else that's not seeing you. Nice to hear you. Good to spend some time and looking forward to trying out a couple of new dad jokes.
Beautiful. That's where a lot of times we prep before these podcasts sometimes. I send lists of questions. We go through things. Simon and I, we've gone back and forth on these things so many times. I'm like, you know what? Let's just do it from the cuff. Let's just start talking for a little bit because first off, Simon and I just recently presented a webinar for CLM on top 10 mistakes carriers keep making. A lot of work comp stuff, a lot of fun stuff, but we actually had hundreds and hundreds of people in attendance. And we had a lot of comments in there just saying, you guys are so funny. I think mainly talking about you. I'm not very funny. They don't pay the lawyers.
Looks aren't everything, Ashton. You get it. You get it.
Hey, fair point. But no, I think that'll be good. And what I want to do today is I want to have the opportunity to introduce you to the audience because I think you have a fascinating story. You're in the insurance industry, you worked for carriers. Next thing you know, you're out there and you are now with Red Bull, giving wings out there, subrogating and handling claims, doing it all, wearing a lot of hats. So that's what I was hoping to do today. Talk a bit about your experience with Red Bull now, what you're doing, and how you kind of got to that place in your career. We're doing a few different series where there's a lot of people have reached out, audience people that listen to the podcast, saying, hey, can we get some people on that have really done well in the industry, have good stories, and tell a bit about themselves so we can figure out, where do we want to go in the industry? Somebody new entering the field. So that's the hope today is that you'll just tell me a bit about Simon.
Well, so this sounds more like a job interview question, but you know what? I just happen to have some stories and I'll be happy to share. So by background, I'm a lawyer, just like a lot of other risk managers may or may not be, although you don't need to be a lawyer to be a risk manager. I started my career working at the Travelers at a sort of a low level, well, it was actually not that low level, senior technical specialist role, where I immediately inherited all the coverage matters and started from day one being involved in some pretty significant matters for the office. And I ended up doing a lot of different lines, including homeowners, who knew, some workers' comp issues, but mostly litigation. And that translated within 6 months. When somebody retired, I ended up taking on their team and their inventory. And before too long, I was a litigation manager overseeing all of the litigation for the Travelers Claim Service Center in the Houston region, which was a pretty big operation. So I oversaw directly a handful of adjusters, but also was responsible for roundtabling, I guess, for lack of a better word, all of the cases that were set to go to mediation and litigation. So I learned very early on when I was in law school, I interned a few places and I worked at an estate planning firm. I worked at a public defender's office in Dallas. I worked at city attorney's office in Thousand Oaks, California. And early on, I realized for me, the practice of law wasn't all that it was cracked up to be, nothing personal. Action. But I felt like being able to do a more traditional, not necessarily 9 to 5, there's no such thing, but not having to worry about a criminal matter on the weekend or preparing for trial, it seemed like it was a little bit more in line with what I wanted to do as I was starting a young family. And so I found myself in insurance. And I spent a good number of years, about 10 years in what I would call, for the job interview description, roles of increasing responsibility, where I took on more units. I was a unit manager, I was a litigation manager, and that's sort of where I got my background. So that's the background. Did you want to interrupt at all, Ashton, or should I keep on going? Because I can go on for days. You asked me to talk about myself.
Yeah, I mean, we're great at that. You can talk. I can talk about myself for hours too. But no, you know what, Simon, keep telling me about yourself. I like your story, so I want the audience to hear it.
Yeah, so I spent that like first decade doing things in insurance. And, when you work in insurance companies, and I worked at a handful of them, whether it was the Travelers, I worked at the Hartford, and I worked at a company called HDI Global, also known as Haflichterbahn Deutschland Industrie, which is an industrial insurer for German industry. And they
Can you give the rest of this just talking in that accent too? Is that possible?
Yeah, but
Very,
I don't get in
very.
trouble.
You must have spent
because
some time out there.
I do, and Red Bull is an Austrian company, so I do spend some time in Europe from time to time, and my yaws are very good, but if I say anything else, I might get called into HR, so I'm going to stop while I'm ahead. But thank you for I could do an Arnold Schwarzenegger, I can do an Arnold, and I think it's about the same, but I won't yodel like I did for the HDI. That's how I used to answer the phone when people called, when people answered phones, when people called, and when people called. But
Making
anyway,
a note, ask Simon to yodel by the end of this podcast. Okay, that's asterisk
Very
right
good.
there. We're good. All right, continue.
that will keep your listeners engaged and never wanting to check in on another podcast again. So I spent the first decade in claims, and then at some point, I think anybody that was around in 2009 knows what I'm talking about. AIG, a couple of the big insurers were in financial troubles right before the recession, and I think there was a real risk that insurance wasn't going to be the same before the government bailout. AIG then became Chartis. I think the government owned a big piece of it. They ended up surviving, but AIG was the biggest at the time. But a few other carriers fell by the wayside. A lot of carriers that had A paper ended up being on B paper and C paper, and it was a tough time for those of us in the insurance business. And so I was looking around at options, and having a law degree has been very helpful in insurance because it gives you an idea of what legal matters are and handle litigation. It's not necessary, but it was also something that I thought that was very helpful in advancing my career. But at some point, I realized that maybe insurance wasn't exactly going to be there for me in the future. So I took my experience in insurance and parlayed it into a risk management role. And after interviewing with like a dozen people, I ended up, after the 10-year career in insurance, I ended up getting a gig as a risk manager at UCLA, University of California at Los Angeles. And I was in that role for a couple of years when I was, I guess, recruited, for lack of a better word. It's a long story, but I had a recruiter reach out to me from Red Bull and said, "Hey, you work with college kids. You understand Red Bull's demographics. So why don't you come over here and see if there's an opportunity for you?" And so I did. And that's where I've been now for almost 16 years in risk management, head of risk management for Red Bull for US and Canada. So that's the story. But I will tell you now the technical thing. How did they pick me for the job? From what I understand and talking to some other people, the posting at Red Bull was open for about 4 months. And I was surprised to see that they were still recruiting because I'd seen it. And I had a coworker, hopefully he's not listening to this podcast, but he had suggested that I apply for the job at Red Bull because he had applied and nobody had given him a call back, and he just wanted to see if anybody would reply back. So interestingly, I did, at his request, submit my application or resume or whatever. Back then, it was LinkedIn was a thing, but not on your phones yet. And interestingly, I got the call and they called me in to interview. And when I went to the interview, the recruiter said, "Thank you for responding to my link on LinkedIn." And I was like, huh? So it was serendipitous. Apparently, the guy sitting next to me that had applied for the job told me to apply. I did. I was just doing it because I was just trying to feel it out. But the recruiter actually had reached out to me separately, and she thought I had responded to her recruiting efforts. So kind of an interesting way to find yourself interviewing for a job. But the summary of it, the job had been posted for many months, and apparently they had a bunch of risk managers that came in and out. And I think at the time, Red Bull had a link on their website that said something along the lines of, "Holy shit." And you would click on it. Red Bull's a privately owned company, and I guess
They can do what they want. It's beautiful, isn't it?
So you click on this "holy shit" link, and it's got a bunch of people jumping off buildings and doing things with motorcycles. Red Bull does a lot of cutting edge action sports. And I think one of the questions that the general counsel asked me was like, "So what do you think? What's your risk appetite? What do you think we should be doing?" And I said, "Look, I'm pretty sure this is the opposite of every single other person that came in." And I said, look, at the time, Red Bull was like a couple $1 billion company. And I was like, whatever it is that you're doing works. So my role in risk management isn't to say no. It's to make sure that you have all of the, the contracts, the risk transfer, all the prophylactic devices in place to make sure that if and when something goes wrong, that you're holding those people that you contract with that are responsible for it accountable. So you're not left holding the bag. And other than that, other than with some narrow exceptions, my job isn't to say no. And I think that was refreshing. And it may be the reason why this old, grumpy, dad-joking guy got the gig, because I looked at it from a different angle. And that's been something that's carried me through. You talk about a company like Red Bull that does a lot of things that look risky. They're not necessarily people jumping off of buildings and planes and trains and all the other fun stuff that we do isn't necessarily as crazy as it looks. Most of the people that are doing the things that we do are professionals. They train for months and months, if not years. They're subject matter expert. It's almost routine by the time they do it, but of course it's their area of specialization. And that's part of it. As long as you do all the things that you need to do and make sure all the safety and you're complying with all laws and doing all these things in the background, I think that is also a really good example of how risk management should work and how you should be handling claims. And in fact, one-liner that I used, if anybody wants to use my interview, too bad it wasn't recorded because it got me a gig for 16 years. Something must have worked. But one of the things I found myself doing when I was in claims, and this is something that you could speak to, Ashton, when you talk about subrogation and you give clients advice, is when I was in claims, I would get a claim coming in the door and I was working on the coverage units and whatever else at the various carriers, whether it was Hartford or Travelers or Hofflichter, Bond Deutschland Industry. But by the time the claim came in, the contract was already written, the injury already happened, the incident occurred. And now we're looking at coverage and we're looking to see who's responsible and how we transfer risk. And you're being reactive, right? So when you're in claims, you're being reactive, and it helps to know how to sort of either triage or work through these things. But I felt like in transitioning to a role as a risk manager, I could be proactive. And one of the things I always say, you may have heard me say it last time we presented, was you've got to get your claims in a position for disposition. I also said, I'm a poet in case you didn't know it. And if the glove don't fit, you must acquit. But these are all other one-line rhymers that I've got for you. I can go at it all day long. But the bottom line is, when you're in a role of risk management, not only am I a risk manager and a claims manager at the organization I'm at, but I spend a lot of time front-loading my contracts, making sure I've got right indemnity, that the interplay of indemnity and insurance and limitation of liability and potentially waiver of subrogation, we try to be ironclad. And I know you can speak to the topic on subrogation, where subrogation waivers are not necessarily ironclad, but it helps me develop my contracts early on and know what happens in the instance where something goes wrong. In the unlikely instance something goes wrong, you know what the parties' roles are. So did you have a question in there somewhere, or did you want me to stop and give a breather and let you back in there, Ashton?
I mean, if you need to stop and, take a drink, you can. You can keep talking this is good stuff, right? That's where the audience, they're going to love this. I think one thing that really is kind of profound of what you said, and I think you don't really think about it much, it's the idea of it's risk management, right? Not risk negation, right? Or not risk no. It's not about saying no. It's about making sure things are done right? Making sure that in that hat that you wear, in my understanding, those who are in risk management with the company, they're wearing a lot of different hats. It's not just about being reactive. It's about being proactive, making sure that risk is properly managed, not negated, and that things are done right. So I feel like you probably have some great stories about this too, especially given you're right. I mean, you think of Red Bull, and of course you have a manufacturer of an energy drink and a lot of other products that are quite good, but you also have some of the most fascinating, you could say, marketing efforts in a way. Those people going out there, and I mean, wasn't it a Red Bull guy that jumped out of a balloon in the atmosphere and went down, and sponsored by Red Bull, the airplanes? They're actually doing this weekend, I think it is. We have this mailboat tour in Lake Geneva. Red Bull sponsoring a mailboat tour. I just saw this on being promoted somewhere. I mean, you guys are everywhere, and it is really cool, the stuff that's going on. Plus, I'll say this to the audience, if you ever get the chance to talk to Simon, I've been pushing for at least a year now to get Red Bull to sponsor me skydiving into a conference to give a presentation. So, I'll renew that request.
Most people would like to watch that and see anybody that will push a lawyer out of an airplane. I think is always going to be well received by any audience anywhere. So I'm sure that can happen, but you'd have to get me in the plane first. And then there's the idea of whether or not the parachute can hold my weight. So I'd rather just go ahead and pass. There's some things that I will say no to, and jumping out of planes are not my area of expertise or my wheelhouse, but I'm happy to see if we can get some coordinated at some point.
We could live stream it on the big TV at the conference center of you pushing me out as we go. I mean, like, I'm going to still have somebody tied to me to make sure I'm good. I'm not that reckless, but I feel like that could be a solid story.
I think
brought to you by Subrogation Support Network.
I think we would have tens of followers. I'm thinking this might be the next wave.
Dozens.
Yeah, but so you mentioned something like Red Bull. In a lot of ways, is known as a marketing company. The founder of our company is a guy named Dietrich Mateschitz, who passed away a couple of years ago. But he was a pioneer, not only because he helped create the energy drink market or the segment. Energy drinks have been around for a while in different forms. But not only did he create the market in 1980s, but he was a marketing guy by background. And if you look at the traditional way companies market, whether it's other beverage companies or even other energy companies, they've started mimicking what Red Bull does in a lot of ways. But historically, other companies that are marketing their goods will use traditional advertising, and that's like media buys or TV buys or ads. And you'll find that Red Bull doesn't do a lot of that. And also you used the word sponsor when we had Felix Baumgartner jump from the edge of space in a spacesuit. We didn't sponsor it. We actually owned the whole event. We didn't take a lot of credit for it, but that's something that Red Bull does, is that we're oftentimes behind the scenes. We put on the entire event and we don't go out of our way to take credit. That's something that our founder thought that was important. But to your point about taking on risks and not saying no, I mean, if you talk to any CEO of any company, they'll tell you without risk, there's no reward. And this is something that probably been taught and it's been ingrained to them in business school. But it's got to be a calculated risk. And for the most part, even though some of the stuff that you see that we do looks like it's really visually ridiculous, some of the things that you see, again, most of it's been tested, tried, and practiced many times before. But some of it still can get you in trouble. One of the interesting Red Bull stunts that we did a couple of years ago was something called plane swap, where two planes went up. They were both put into nosedive position. The pilots each jumped out, two cousins, won't name the names, and they jump out of the planes. And the goal was for each of them to jump into each other's planes while they were in nosedive and get back in there and take control of the planes and land them. We were successful, at least 50% successful, because one of the planes was recaptured and landed. The other plane didn't make it, but we did have our other pilot parachute down. So look, even when you train and you spend a lot of time preparing for these types of things can go wrong. And at the end of it all, we still had, obviously, a way out for the pilot not to get injured, and everything was fine other than that plane won't fly again.
Which is so wild. I mean, that is risk management at its finest, right? I mean, you have other companies that are worried and they're like, you know what? We can't have 3 of our executives on a plane, commercial airline at the same time. Not saying that that's, you guys don't do something similar, but the fact that you're doing such things and you have to look at these, and these are planes flying and people jumping out of them and people jumping out of the atmosphere. I mean, any other interesting kind of, do you call them stunts, or what would you call it, promotion?
I mean, we do all kinds of things. Some of them, our insurers will call them stunting activities. We call them aerobatics. We call them all kinds of things. It depends on what you're using. Another really interesting one, we do a lot of, again, back to what the link said on the Red Bull site many years ago, we do a lot of crazy shit. I hope nobody under age 13 is listening to this, but I'll use the word Scheist or something just to say the Austrian German word of it. But one of the other ones, like, we do a lot of things. Some of them are very, very interesting. And, I'm kind of a grown man. I'm not the biggest consumer of action sports and YouTube videos, but I will say one of the ones that was very interesting to me was we had a plane in the Swiss Alps. And normally it's a big deal. I think you offer to jump out of a plane. I mean, you won't see me in one of the squirrel suits or anything else jumping out of planes. But we decided to turn that one on its head, I guess literally and figuratively. And we had a couple of guys that were in the Swiss Alps. They jumped from the mountainside into a moving plane that was traveling at 100 or so miles an hour. And they managed to jump in this really narrow cargo door. And so that's a thing, jumping out of a plane. Yeah, that's interesting. But what about jumping into a moving plane? We've done it. It's on
Those
YouTube.
are the squirrel suits, right? Is that what they call it?
Yeah, with the squirrel suits. Those things are amazing. I think I saw a squirrel suit guy go from like Galveston up to Austin, which is a couple of 100 miles. So I guess they have a little motor under the squirrel suit. I'm not really sure. They don't make my size. They come in European sizes. They're extra medium. So I'm not really getting fitted for one anytime soon. But yeah, it's amazing what these guys do. It's really it's what makes it interesting.
Yeah,
But
the name's everywhere. And I'm looking right now. So I remember seeing something being advertised in Lake Geneva, where I live, Wisconsin, small town. And yeah, it's the
not the one in Switzerland, right? You're not in
No.
Lake Geneva in Switzerland. I just wanted to make sure everybody knew that you're a hardworking man's man working in Minnesota, right? Not necessarily
Wisconsin, land of beer and cheese.
Beer
That's
and
what
cheese.
got going to.
Well,
And
that's what my jokes are filled with, cheese.
they're great jokes. It's great jokes, Simon. Because what they're doing here is they have a mail boat where it's an old school area. I think most houses are built like late 1800s, early 1900s. You get these houses all along the lake. In the boats used to deliver the mail. So U.S. Postal Service works with the boats, and it's delivered by boat. So the mailbox is on the dock rather than on the road. It looks like it's basically it's a contest to see who can jump the furthest or be the quickest to deliver mail around the lake. So that's it. Thanks for sponsoring our local community, Simon.
Well, hopefully we get you the mail on time and we're not interfering with postal operations. Today is Friday, right? So tomorrow is Saturday. We have cliff diving in Boston going on. And you might be scratching your head and saying, I don't think I've ever seen any cliffs in Boston, and you would be right. But cliff diving is a global property. They actually do jump. Professional divers jump from all kinds of cliffs all around the world. Really interesting photos and places that we've been. But in Boston, there's a museum that's on the water, and I think it's a 3-story museum. And so we jump, or our athletes jump off of this museum, and it's a really interesting visual. So there is cliff diving in Boston, and it's going on this weekend. So something to watch if anybody's interested in that, or it'll be on various channels, including YouTube, I'm sure, in the next coming days.
For those in Boston, that's great. Now, Simon, all right, so tell me a bit. Obviously, we have your background, and I think what's the day-to-day of Simon look like? So telling some good dad jokes, out there, enjoying the sunshine. But what do you do? What are you doing on a day-to-day basis?
Yeah, so at Red Bull, we focus on 3 things in the risk management department. We're focused on, first of all, the easy one is, and something that you're probably most familiar with, is overseeing the claims, right? And so the assumption every time I talk to anybody is that Red Bull must have an inordinate number of general liability claims. And we do have our fair share, but that's not really what's driving our claims business. We have, just like every other company out there, we have autos on the road. We have a big fleet of vehicles to the tune of thousands. And we have employees that make deliveries through our distribution arm. And, when you're doing loading and unloading and you're on the roads putting millions of miles on vehicles, you get into whatever it may be, whether it's, lifting injuries or potentially car accidents, whether it's you're at fault or somebody else is at fault. That's kind of the nature of the business. So at its core, Red Bull's liability typically is tied to some of the more traditional, it's not the people jumping from the edge of space that creates liability for us, but we're like just about any other company in terms of what we see in terms of frequency and exposure. So claims is one aspect of it. Just like a lot of other bigger companies, we have a retained limit. We use third-party administrators, and we try to insure for those risks that are more than just a nickel and dime claim. So you might be surprised to hear that I don't have a guaranteed cost auto policy that pays from $1 every time we scratch somebody's bumper. The other thing we focus on is event risk management. So my team is involved with overseeing sort of these big brand building events. Primarily, we have hundreds of brand building events. I didn't know about your postal boat one going on this week. It's probably not one that makes it into my, weekly meetings, but the cliff diving one is a big brand building event, public facing. And so a couple of my team members are in Boston. And even though we don't actually put on the event ourselves, it is a Red Bull event, and we have third-party production companies, and we want to make sure that everybody is doing what they're supposed to, and the production companies are typically responsible from load in to load out. But we also want to make sure that from an optics perspective, from a brand perspective, it's like when you invite somebody to come paint your house, you are not telling them how to use the roller or how to do brush strokes, but you want to make sure that you got the color of blue that you asked for. And so that's sort of what we do. We do go out and manage that aspect of our big events. So that's a part of what we do. And then what I spend a lot of my time on is the legal risk part of it, which is contractual risk transfer, making sure we have the correct clauses. And I'm a big believer in not only, I'm going to call it the Trinity, although I'll probably get hit by lightning when I'm done with this, but the insurance, indemnity, and limitation of liability and how they interplay together. Sometimes you get really good insurance. Sometimes you get really good indemnity. And then you go down to the limitation of liability and you get the waiver of subrogation. But you say, notwithstanding all that great insurance I offer you $20 million in insurance, my liability is limited to the contract value, and it's a $10,000 catering contract or something. And so you've got to make sure that you're carving out third-party liability. You're making sure that, you're getting a fair allocation of risk. And we try to be fair in many cases. And this is a good part of what my day is spent on, is front loading these agreements and making sure that we've got adequate insurance and adequate risk transfer, and that we're being, for the most part, fair with our vendors and our retailers. And so that's sort of part of what we do. So those are three areas: event risk management, legal risk management, and claims handling.
Now, in those roles, obviously, we're on the Subrogation Support Network podcast. You and I just presented on subrogation. It's one of the many things that you do. Are there any trends or anything you're seeing in your space relating to how subrogation is progressing, how you treat subrogation, how your team lays importance to it?
Yeah, look, it's always been an important part of our overall risk profile and what we manage. And again, part of the limitation of liability that I spend a lot of time on. The trend that I've seen, I'll say, look, it's always cyclical in claims and you see the up and down. But to your point, we had this presentation that we did last week for CLM. It was a 1-hour CLE conference during lunchtime. I think we had over 320 people sign up for it. And as I recall, I took a quick look during our presentation. There was over 264 people that were in attendance. And that's a pretty big number for a random lunchtime. I mean, people need the CLE credit, but I don't know if they need it that bad. But I also looked very quickly at the list of the people that were in attendance, and a lot of them were carriers. And I think that's interesting to me because it's kind of a carrier-driven thing. But if you look at what's going on in the insurance marketplace as a whole and take a step back, and I see this as a risk manager, as a buyer of insurance, because I forgot to mention, obviously I have to go to market and buy insurance. What I've seen post-COVID is the same thing everyone else has seen. It looks like there's inflation, right? Everything has gone up in cost. What used to be $150 to tow your car from an accident scene, I'm seeing bills coming in at $900. I've seen people that are doing tractor trailer claims, bills coming in at $20,000 and $30,000, and people are releasing. But so costs are up across the way. If you're in LA, I'm not saying this is anything negative, but if you work at McDonald's, minimum wage starts at $20. If you want to get a couple of Happy Meals, you're in $20, $30. So everything's more expensive. You've also got this social inflation where people assume everything's more expensive. And I sat in on a conference the other day where people were saying that people don't carry cash anymore. They're using credit and debit. And the value of money seems to have diminished because people, when they count out the 20s, if you were to pay your rent or mortgage in 20s and realize how much money is going out every month, you might say, maybe I'm going to go live in a trailer because this is a lot of money. But when it goes out electronically, you don't think about it. The value of money is a little different. So juries are giving it away more. So you heard, and one thing I didn't know is that nuclear verdicts is not trademarked or registered. So I can't call it that anymore, but let's call it a thermonuclear verdict, which is what we're seeing more and more of. And it scares insurance companies, but their bottom line is impacted. And here's one that nobody thinks about. I'm in California where we had these fires recently, earlier in the year in January. We had the Palisades fire, we had the Eaton fire. And for the most part, those fires were insured. Some people weren't insured. But what happens in a case like that is the insurance companies, this is something that people don't think about. And again, why does this have to do with subrogation? I'm getting there. Insurance companies oftentimes reinsure. So even though they might have a contract with you that says, I'll pay your total loss up to the value of your home, let's call it, I was going to say, let's call it 100,000, but that's unrealistic in California. Let's say it's $1 million policy. That $1 million policy that's covered by the primary carrier may be reinsured like on a 60% basis through a reinsurer, who then, in the case of a total loss, will reimburse the primary carrier 600, so they're sharing in the loss. Well, what's happened in the last years with these thermonuclear verdicts, with things like these fires, with some of these weather changes, whether it's property or whether it's liability or whether it's a combination of all, these reinsurers are beginning to lose their shirts too, because they don't take in as much premium to cover the 60% exposure. They don't make as much money as on the primary. So the reinsurance market has started, in my view, has started to sort of dry up a little bit. And so when there's no reinsurance, there's more pressure on the primary to hedge their bets within their own layer. What does that mean? They're requiring bigger companies, think about the Fortune 1000, this is a really good example, to take on more loss-sensitive options, have more skin in the game, have a higher retained limit. So what might have been a $50,000 deductible or SIR is now $100,000 or $200,000 or $500,000. So that's how they're addressing it. But the other thing they're doing, and I think the presentation numbers that we got last week really are a good showing of what's going on, is that they're trying to not leave any money on the table, right? So from a carrier's perspective, sure, we have to pay the claims, but what can we do to ensure that we're still profitable and not leave any money on the table? And that's where the services of a firm like yours comes into play. That's where subrogation becomes something that's much more in tune. And whether you're trying to avoid it on the front end by having the waiver language or being able to recognize the opportunity to subrogate when it's available, this can make all the difference in the world. Year before last, I had a recovery in excess of 8 figures, which is more than $1 million, over 10 million. Yes, I'm trying to remember what 8 figures.
A lot of zeros. A lot of zeros.
A lot of zeros. Exactly what you won't see in my checking account on any given day because my kid's in graduate school. But yeah, so recovery is now seemingly, and it's probably been a boon to your industry, is seemingly where the insurance carriers are looking. In fact, in regular practice, I see this almost every day where somebody is trying to pull me into arbitration forums on a $10,000 bumper damage case where a carrier pays and they're looking to find somebody culpable. And it seems like it's not just something that is in the background that they will try to enforce or try to recover on when it's a legitimate claim, but they're basically sending through every single one. And I've noticed, and I worked in insurance before, and I don't know if anybody is listening to this podcast works for an insurer, but there's what they call a scorecard item, the things that insurers look for from their adjusters. You can't always dictate what type of claim you get. Is it a bad catastrophic loss? Of course, you're going to pay more, but what they can do is look at the metrics, and they'll look at things like days to decision, how many times you stair step your reserves, whether you recognize subrogation opportunities early in the life of the file, and whether you took proactive steps. Of course, you have to look at coverage. These are all scorecard items that adjusters are evaluated on, and it impacts their bonus. So the big push now, not just in my opinion, what I've seen across the board with all of the big carriers and some of the regional ones, is that there's this big push to put everything they possibly can in subrogation. And while I'm a big fan of subrogation, I'm all about holding people accountable. I think some of it may be a little bit overdone, and that's why having somebody that's a professional that knows what they're doing and recognizes the value in doing it up front, but also is in a position to say, hey, maybe the juice ain't worth the squeeze. This is probably not the best approach. And so there's a little bit of a balance there. I'm all for subrogation, and I think it's something that's very important to hold people accountable and take advantage, not take advantage, that's not the word I would use, but to enforce the contractual rights that you have potentially. And even if you don't have contractual rights, subrogation is very much a thing when you can look to the tortfeasor that caused an underlying claim. But I think it may be overused, and I think it's important to get the right set of eyes on it to make sure that it's worthwhile and also fair in the approach that folks are taking. So I don't know if that's helpful.
Yeah. Well, I mean,
Talking
there are some scenarios, Simon, where, I will get cases from clients and I'm like, I'm all about getting creative. I tell them if it's possible for subrogation, send it to me. Because I've had cases that look to be dogs. And next thing you know, we either one, had a full recovery because we found a new argument to make, or two, hey, we got 20% on a case, beautiful, that we probably wouldn't have won. So there's a lot of approach about being creative, but you're right. There are some of those cases, especially with arbitration, where we've seen clients like, no, just push it through. It's like, there's no chance, right? I reviewed one this morning for a client. Motor vehicle collision. Police report says we caused the accident. We rear-ended them. Everyone says, two witnesses. There's a video of it in my claim file showing us rear-ending the other party stopped at a stop sign. But our insured claims that we weren't at fault. So the client still sends it to me. It's like, we'd like you to litigate this case. I'm like,
don't let the facts get in the way of a good recovery. That's what I would tell my adjusters if I'm just kidding. Of course. So yeah, that's a perfect example.
But then again, I'll see plenty of other cases where I've just, in the last month, I probably have recovered on 40 accidents where we rear-ended the other party, right? So that doesn't mean that there's some proceduralized way. There can be questions of liability and still have a recovery. There's even states, Simon, Louisiana's recently changed, but Missouri, other states where it's a pure comparative fault system, meaning that even if we are 90% at fault, we can still recover that other 10%. So I train on thinking like a plaintiff's attorney, getting creative, building stories, having narratives, remembering that subrogation is plaintiff's work. And we need to think like a plaintiff's attorney. Now, you're not going to see me chasing an ambulance like a dog, but you could see me, going out there and taking a weak case and getting creative, building a story and recovering on it. So I think that's important, while also not taking it to the next level. One thing that you mentioned that I think was important is that you've seen it changing, right? I think I've heard that from. I just recently had a conversation with Karen Siebert with Gallagher Bassett. She was just on the podcast. I've had a number of people that are big in the industry, like you, Simon, where they've said, yeah, we've seen a shift over the years insofar as subrogation is no longer in the basement behind the water coolers, hidden down there where careers go to die. People are coming into this because carriers are starting to realize, oh man, you're right. We're having a hard time getting reinsured. It's costing a lot more money, right? We're needing to do something new. And the best thing we can do is just bring in money that previously was paid out. I mean, we have on our website at MWL a big kind of like a commercial, and it's, subrogation, time travel for the insurance industry. And it kind of shows a vehicle accident, but it's like the car's in a crash, then all of a sudden it's like rewinding time in slow motion going back. That's the idea there. I mean, it is a way to really initiate the third leg of the stool, right? I mean, it's the way that we can really, really bring in and be more effective in the handling of claims for the carriers and the self-insureds. But I'm glad, it sounds like you, with Red Bull, you guys do see the importance. You are pursuing subrogation when it makes sense.
Yeah. And look, it goes back to the original idea of why we have this risk transfer in place anyway. It's to hold people accountable. And ultimately, if somebody could do something and cause an injury, it's what's called in insurance circles a moral hazard, right? If you know that somebody else is going to pay for your malfeasance or your negligence or your failure to do your job right, you're less likely to take measures to ensure other people's safety or whatever else. So it's holding people accountable, not just from a contractual standpoint, but also holding them accountable after the fact. And, why does it matter? Well, holding people accountable will get them to, let's go back, Ralph Nader and the seatbelts thing. Like, it's for everybody's benefit. Not a lot of companies would have loved the idea that people pushed for these safety measures, although we are all better off for it. And I don't know how many thousands and thousands of lives have been saved, but to be able to then put not just pressure, but put focus on the root cause of whatever it was. And, look, ultimately insurance is covering it potentially or whatever else to some extent, depending on retentions, but an insurance loss ratio is impacted if they have to make good on something that they were the tortfeasor on and they gave rise to the underlying injury. And that will help shape their behaviors in the future and get them to have programs, whether it's safety programs or better training or whatever else. So there is sure, getting the recoveries and keeping insurance companies afloat is a good reason to do it, or keeping companies like me in a position where we can continue to do what we do. All good. But ultimately, I think there is a societal reason why we do this as well, holding people accountable and having them do right by either society or others that they contract with. We're paragons of virtue, you and I, Ashton.
True.
We're
Yes.
not curing cancer, but we're kind of close. All right, I didn't need to make light of that, of course, but
Solving the
I
world's
think
problems one subrogation recovery at a time. You know?
exactly, one car accident at a time. But no, I firmly believe that, and it's part of the overall picture. And all too often, it's neglected, especially if margins are good one year and you don't have a bunch of people in your subrogation department. I know a number of carriers have started building up their subrogation teams again. Some have like a national office somewhere in California, out in Riverside or something, where all they do all day long is do subrogation, and they've increased and minimized. And here's the thing that actually kind of drives me a little nuts is these AI-based systems where you've got a bunch of vendors coming in now, and the computer is telling them, oh, you have a right to subrogate, not realizing it's a pure comparative jurisdiction versus a modified comparative jurisdiction versus there's a statute of limitations versus it's a subrogation interest versus automatically perfected lien. Like, computers are helpful, but you still need the human touch. And I think a lot of these, I guess the new wave I'm beginning to see also is you've got a bunch of software programs that are trying to substitute in for either common sense or licensed people like yourself. And it has created in some instances a flurry of frequency of subrogation, and it kind of diminishes the impact, and it kind of isn't good for all of us, but I guess we'll learn over time.
AI, I would say it is a tool. It's not a solution, right? A lot of these things, it's a tool,
That's
not a
what
solution.
my wife calls me.
Oh, that's,
A tool, not a solution.
I have the same nickname from, I hear the same thing. That's so weird. Are our wives talking together, Simon? That must be
I
it.
mean, no, we can't have that. We need to stop that if that's the case. Anyway,
Shut it down. Shut it down.
No.
All right. So one last question before we wrap this up that I do want to ask is, if you're talking to be it somebody new to insurance in general, recent school graduate, or maybe somebody who's in the insurance space and looking to get over to risk management for a company, what advice would you have them? What would your recommendations be?
Yeah, look, every time you talk to an old timer, and I guess I'm beginning to be that old timer, when I was your age, I walked up the, mountain both ways to school because there was a mountain both ways in the snow.
And then you yodeled halfway up too.
Yeah, yodeling goes without saying. Look, I think you've always got, I mean, I'm not gonna start talking about what we started seeing in sort of the younger workforce, for lack of a better word. But a lot of times people are like, well, I wasn't trained on that, or that's not in my pillar. It's not something I'm responsible for. My job is to do X, Y, and Z. It's not to do these things. And I think for me, what's been helpful in my career and has opened the door for roles of increased responsibility. Well, first of all, a little personality doesn't hurt either. And I don't know if my personality is good or otherwise. People are probably trying to avoid me so I don't spend a whole day in their office. But oftentimes insurance people are jaded. We're taught to question everything. And oftentimes the sky is blue. No, it's not. It's like gray. Like, there's a point where you have to have a little bit of a balance and have a little bit of a personality and not let these sometimes terrible losses impact you and your inner personal communications. But I think what's really important is to have a broader understanding. Subrogation is a really interesting one because it focuses on a number of different things, and you have to look at the state that you're in, the rule of law, whether it's comparative or otherwise, what benefits might apply. Is there med pay? Is there uninsured motorist? Is there auto? I've been able to get coverage for things that are excluded under a CGL, covered under a CGL. So a broader perspective on coverage. So for me, I think the key in parlaying into a different role as a risk manager is it's not just a one size fits all sort of one dimensional view. You've got to soak up all the information you can. And sure, you could do a couple of internet searches and get a more exact answer. Whether it's right or not, I can't promise. But just having, I guess, being inquisitive and having a little bit more than just the black and white and looking outside of the box. I think all these things and being interested in claims and understanding, I mean, you can't teach somebody to understand how the world works, but to ask the questions and rely on people that have done it before and look at the broader picture I think that's key in things like subrogation or in the ability to move up in roles. And of course, you'll find that people that have been moved up in either insurance roles or finding careers in insurance, personality goes a long way. So if you don't, until you make it, you got to fake it. So act like you're nice and act like you're interested and actually do some of the work behind the scenes and be prepared. And it goes a long way. I think that's what's carried me. And I may not know everything all the time, but I sure know how to fake it until I make it.
And then next thing you know, you realize you actually do. Like I've had those wake up moments sometimes where I'm talking to somebody about some very obscure legal issue. And I'm like, yeah, wow. Yeah. I actually knew the answer. What? It's like waivers of subrogation and it's different from reimbursement. Excuse me? Okay.
It's the mere exposure effect, right? The more you're exposed to it at some point, people find you to be a subject matter expert. And there's a lot of people that are interested in doing subrogation or coverage or claims or litigation. So everybody's got this like, oh, I don't like litigation. I just like to handle property. It's all good, but you have to have an open mind. You have to be flexible. And like this business, if anything, is cyclical, whether it's sometimes the plaintiffs are winning at every trial and sometimes the defendants are getting verdicts, or whether it's subrogation is the hot topic. I think you've got to be mindful of that. And for sure, I see subrogation as being something that is really top of mind right now. And I think it only continues to increase until margins are better and until verdicts are coming back a lot softer and people aren't overpaying claims like we have to in order to avoid potentially a catastrophic jury verdict, which I think a lot of carriers are fearful of. Not everybody, and not necessarily me in all cases, but that's sort of where we're at right now, is I think in terms of from an insurance perspective and from a claims perspective. So I probably answered none of your questions directly, but I gave you a lot to work with, Ashton. Food for thought.
It's beautiful, Simon. Fantastic. I was just thinking about it. I'm like, all right, next time, because we play off of each other well. We got to do a presentation in the future. I've been thinking of topics. I'm liking something along the lines of, and we can play on it, but giving subrogation new wings, flying high, and yodeling to the world about best strategies for subrogation recoveries.
Yeah, I'm going to put you in touch with Red Bull's IP, tell you that that's not okay. But as long as you don't spell wings with 3 I's, because we only give wings to people and ideas with 3 I's. Because if I gave you wings, then you might have the class action that we had with Carruthers 13 years ago, where we didn't give people wings and they felt like they needed to file a class action.
I'm going to be very careful. I'll be very careful about that because, with the tens of people who are listening to this podcast, you never know. There could be an IP lawyer in there too.
We may double and get to 15 or something, or at least grow 50%. Hopefully this helps. Good catching up with you, Ashton. I think that maybe our dinner time, lunchtime bell I hear ringing. Ma, is that you? Yeah, I'm going to be right down.
All right, the meatloaf. The meatloaf
is ready. What did you call me? Okay, great catching up, Ashton.
Simon, thank you. Hey, audience, it's a pleasure. Again, this is Ashton Kirsch with my amazing guest, Simon, signing off today with this episode of the Subrogation Support Network podcast. Until next time.